Good afternoon, everyone, and welcome to the Daily Volatility Box Report for August 26th, 2019. We are TOSindicators.com, home of the Volatility Box. Before we dive into today's report, I'd just like to remind everyone that we released our next free indicator this past weekend called the Market Pulse Workspace, essentially. It's available for download for free at tosindicators.com/indicator/marketpulse. Essentially what this indicator lets you do is it lets you identify easily what stage of the market condition we're currently in on whatever ticker you're looking at, and then it also gives you a broad view of all the major ETFs at a glance and tells you which one of the four stages of the market we're in each one of those respective ETFs. So the stages are either accumulation, distribution, acceleration, or deceleration, and you can quickly view this at a glance. And we also plotted this using a variable moving average. And all of this, the tutorial, the actual indicators, the scans, all of that is available for free at this URL right here. Once again, that's tosindicators.com/indicators/marketpulse. Okay, let's actually dive into the report for today. So, relatively muted volatility day. We did have two setups that occurred. One was in the Nasdaq futures, and one was in the crude oil futures. On the Nasdaq futures, we hit both our T1 and our T2 for an overall P&L of $1,020 on two contracts. And on the crude oil futures, we only hit T1 for an overall gain of $250, bringing our total for the day up to $1,270. This is a great start to a Monday, and I'll take being up and headed into the week with some sort of a positive P&L going in, even if it is just a little over $1,000 on two lots. It's still a win, and I'll take that. Let's dive into charts and take a look at the trades that set up today. Let's start with the S&P futures, and we'll approach this market the way we approach all of our markets every single day. We take a look at the first full hour of trading activity, and we check to see whether or not the S&P futures breached either side of the aggressive volatility box's entry lines, which are these blue cyan lines. As you see here, we very clearly touched them, and that was our sign to switch on over to the conservative volatility box. What's interesting today is we switched over to the conservative volatility box on almost all of the indices outside of the Nasdaq futures, which interestingly enough is where we had our actual one setup. If we take a look, we'll see that using the aggressive volatility box, we had the same setup also take place on the S&P futures. However, our rules told us that we should be using the conservative volatility box on the S&P futures. And that's why it's so important to make sure to be able to track and understand the volatility of each market and morph the indicator into the volatility that you're experiencing for that day so that you can actually find trade opportunities. So, for example, while on the S&P, the Dow, and the Russell, we were operating on the conservative volatility box, the Nasdaq futures gave us permission to actually continue to use the aggressive volatility box. As you see, we take a look once again at the first full hour of the market, and in the Nasdaq futures, we didn't get close to breaching either side of the aggressive volatility box's entry lines. And that was our permission to continue to use the aggressive volatility box for the rest of the day. Our actual setup came right here where we had an entry to go short with essentially an uprise, and this is where the ticks hit 1,000, and we were able to fade into that strength. Our entry was right at the blue cyan lines. Our stop was outside of the volatility box where we gave it, I believe, 20 points, and our second target was 31 points. So once again, our first target using this short is what we risked, which is a 20 points, and that was hit right here. Our second target was the target line, which is plotted right here with the gray line, and that was a total of 31 points. So in total, we had 51 points that we were able to take out of the Nasdaq futures today. Let's go through the other charts just for good measure. So we take a look at the Dow once again. So we breached the aggressive volatility box, as you can very clearly see. That was our sign to switch over to the conservative volatility box for the rest of the day. And looking at the conservative volatility box, we had absolutely no entries. We didn't breach either side of the conservative volatility box's entry lines, and that helped us stay focused on the Nasdaq futures. One other market that did give us trades today was the crude oil futures market. So on the crude oil, let's go back to the aggressive volatility box, and we'll go ahead and bring the timeline back in so we know exactly where we're looking to measure whether or not we breached either side. So here we take a look at the first hour of the market open, and we check to see whether or not we breached the conservative volatility box's entry lines. We see here that we very clearly didn't, and that crude was a contained market today, and that gave us permission to start to look at the aggressive volatility box for entries. Our entry came right here, or right around 9:30 Pacific Standard Time. Our stop was outside of the volatility box, where we gave it 25 cents of risk on the crude oil market. Our first target was the 25 cents, which was hit right here. Our second target was at the target line, which was not hit, and so our second contract was stopped out for a break even, but our first contract gave us our win. So to sum up today, what was interesting at least to note is while the S&P, the Dow, and the Russell futures were all operating using the conservative volatility box, the Nasdaq futures and the crude oil futures still gave us permission to use the aggressive volatility box. And as a result, we were able to fade the edges in the markets that essentially proved to be the least volatile, helping us end the day with a total of 2 trades, both of which were winners for an overall P&L of 1270 headed into the week. And that's just a Monday. We'll take that as a win. If you'd like to sign up for the volatility box, we're down to our final 4 spots at the discounted monthly rate of $97 a month, after which the price will increase. Hopefully, through all of these videos, you've seen that the volatility box is a no-brainer investment and is single-handedly, or should be rather, the best trading tool in your trading arsenal. With that, we hope you have a great night. We look forward to the rest of the week. Hopefully the same sort of volatility ensues and we're able to take advantage of it and profit. Have a great night, everyone.